Hello, everybody. This video lecture is going to be on Chapter 3, which I'll be introducing you to transactions. Let me go ahead and share my screen. And let's get this going. Okay. Chapter 3, QuickBooks Online Transactions. Okay, we're going to start out with introducing you to QuickBooks Lists, chart of accounts, which we did in Chapter 2. Then customer list. Oh, I have somebody here that's actually joining me. Wow, that's pretty cool. All right. Well, I didn't expect that. That's great. If you have any questions, Jesse, just let me know. All right. Chart of accounts. We did Chapter 2. Customer list. Those are the folks that we sell to. Our vendor list. Those are the ones that we buy things from. Of course, the employee list, those people who work for us. And then we have products and services list, which are the items that we sell. We'll also talk about how we enter transactions. So we can enter transactions using an on-screen form. So yeah, if you wanted to write a check, you kind of put it in the check information there using the on-screen form. Also, you can enter transactions using an on-screen journal. So that's going to be interesting. You know, what's always kind of comforting to me is that in any computerized system, you're going to have a journal entry that's put into a journal, and that's going to post to the ledger. And so you can use a form, you know, to get that journal entry made, or you can go right to the journal, and you'll see what I'm talking about there. But just knowing that, yeah, you have to have a journal entry, and it has to go into the journal ledger. Also, we're going to learn how to enter transactions using the navigation bar, the new icon, and the gear icon. Okay, so. And the types of transactions that we're going to go over are banking and credit card, customers and sales, vendors and expenses, employees and payroll, and other transactions. That would also include recurring transactions. Okay, and we don't go very deep into them, but we do introduce you here, which is kind of nice. All right, so if you look at your NatSav or sat-nav thing, this is unique to our author. She likes this. But anyway, we're focusing here on transactions, right? And these are the ones we're going to be doing. Now, I had a student that was very concerned, conscientious student that did Chapter 2, and she said, man, I don't know if I did it right or not, and I don't want to get in trouble when I go on to Chapter 3. I assured her that there are safeguards in place to make sure that when you move forward, that if things are going to work. So after you finish Chapter 2 and you proceed to Chapter 3, the book has you review your chart of accounts. And so you're going to compare your chart of accounts in your QBO company with this list. And yeah, it's pretty easy, but look on page 128 to 129 and make sure that they all match up, because these are the accounts that the author is going to be using in the future. Now, I had to fix some things myself. For instance, ask my accountant. I had it under like professional fees or something, because as you know, the detail amount or the detail type, she didn't really help us. So I just kind of guesstimated the best stab that I could do it. And I said that I don't think it's going to matter because it's, but anyway, she puts it into utilities. That is really strange to me, but you know what? It's in the book. I changed it to utilities because I don't want any trouble either. But I think the main thing would be that you have the account number, the account name, and the type. Those are the really the ones you have to look out for. Now, your chart of accounts will have other accounts that we don't have account numbers for. That's okay. QuickBooks created those for you, and we're not going to use them. But leave them alone. That's fine. But these are the ones that you need to have. Okay, so make sure you do that. Okay, next. What are transactions? Transactions are simply exchanges between our business and other parties, such as customers, vendors, and employees. We need to keep a record of all transactions. And QuickBooks Online offers us a streamlined way to keep track of transactions, okay? Part of that is to develop lists, right? Lists save time so we don't have to re-enter the same customers, vendors, and employees each time we enter a new transaction. So let's say that, we always pay a PG&E bill. Well, we're going to put PG&E in the vendor list. So when we pay that bill, we can use a down arrow to choose PG&E, and all the information will pop up. It'll pop up like the terms, if there's any credit terms like 210 net 30. It'll even put in if needed, they'll put in the address of PG. We're going to send the bill, all kinds of really cool stuff. So that's it. Now, if you want to access like the chart of accounts, then you're going to go down here to accounting and then choose chart of accounts. If you want to get to the customer list, now customers who are folks that we sell to, so go to sales and then customers. For vendors, those are the people that we buy from. That's under expenses, under vendors. And of course, this one's pretty intuitive. If you want the employee list, go to payroll and then employees. Okay. I even kind of tell you how to do that here. What's interesting in this slide, I want you to know that the other products and service list was not in that previous slide. So the products and service list is also in sales. So if you want a customer list, you go to sales and then choose the customer tab. If you want products and services list, we'll go to sales again because you're selling those items. Kind of intuitive. Then go products and services. Now, in addition to the navigation bar, you can access all the lists by the gear icon. So they show you how to do that on page 134, the gear icon, all lists. Okay. Now, there are two ways to update the lists: before the transactions and while entering the transactions from the transaction screen. So I think we're going to focus in on this one right now. While entering the transactions from the transaction screen. I think in chapter 3 that we're not going to go directly to the customer list and put our customers in first. We're going to create an invoice, and then we're going to have to add the customer on the fly. That's what they call it. It's on the fly, right? So how do we do that? Entering a customer on the fly. All right. What we're going to do is go new. And then under customers, hit invoice. Then we're going to have the invoice form pop up, and we're going to put in the new customer. You hit the down arrow, hit add new, and put in your information, right? When you hit add new, it's actually going to go here, something like this. I think it may be a little bit different, but it's almost the same in your edition of it. And then hit save. So that's how to add customers and vendors on the fly. I like how I say that. All right. Entering transactions. there are two main ways to enter transactions in QuickBooks Online: the on-screen journal and the on-screen forms, such as invoices and checks. Like I was saying to you before, no matter what, I don't care what computerized accounting system it is, there's always going to be a journal entry created that's going to be posted to the ledger somehow. And you can create that journal entry directly into the journal, or you can use on-screen forms, okay? So the first one we're going to do here is on-screen journal. And you're going to love this because it's really easy. To do a journal entry, you hit New. Then you go to under the other, Journal Entry. And this pops up. And it's the journal that you know and love. You've already done this before. You're going to put in the account and the debit amount. Then you're going to put in the credit account and then the credit amount. That's it. And then you save it. You're done. It's easy. Here they say cancel because I think when you do it through the chapter, they want to show this to you, but they're not going to have you do a journal entry. So they just want you to cancel to get out of it. But yeah, that's what you do. Just enter your account, enter the debit amount, put the credit account and the credit amount and hit save and you're done. Now, how about using an on-screen form? Let's say that we want to pay an expense. Okay. Well, we're going to hit New, and under Vendors, hit Expense. And here is what it looks like, right? So it looks like, look at the information here. You can see what's happening. We're paying Bitchit supplies, and how much are we paying them? Well, $58. And how are we paying them? With the credit card, right? And the payment date is January 1, 2023. And what is it? What kind of expense is it? Well, it's really not an expense. It's funny that the QuickBooks does that. They talk about expense forms, but it can be for an asset as well. Actually, this is an expense. So look, it's $5,000, but you can put an asset in here too. Yeah, this is going to be office supplies expense. Account 5,024 and amount of $58. Now, I told you that the form is going to create a journal entry behind the scenes. And you can tell by looking at this form what the journal entry is going to be. Okay, well, we're paying something, right? So, and how are we paying it? It's with a credit card. So that's actually going to be my credit to this account. And what's my debit? Why are we paying it? Because we're buying office supplies. So it's going to be debit, office supplies, credit, the liability, Visa credit card. Now, if you want to see that journal entry that we just made using this online form, go down to More, and then Transaction Journal. And here we go. Let's take a look at it. There it is. And just like I said, I think this is funny because, we always train our accounting majors and everybody to make sure that when you do a journal entry, you list your debits first and then your credit second. QuickBooks doesn't do that. I don't think that they're accountants. It's funny that they would keep doing this, but it still works. So they list their credit first and then they do their debit. But it does work because here it is. Like I told you, debit, office supplies, $58, credit, Visa credit card, the liability for $58. So we're in balance, okay? Now, there are three ways to navigate and enter transactions. You can use the navigation bar, the new icon, or the gear icon. And the gear icon is for recurring transactions. So if I wanted to go to that expense account, like we used the new icon button right before, but we could go to expenses and then choose, the expense form. Okay, so you can use the navigation bar. This is my way I like to do it, and you guys will come up with your own way that you like to do, but I use the new a lot. If I want to enter a transaction, I just go ahead and hit the new icon and then pick it. It's all right here. So that's what we'll do. We just hit new, and if you want to do the expense, we could go ahead and put it here. If I wanted to do an invoice a customer, well, I could go to sales, and what would be the next one over? I'd have to take a look, but this is where you'd start to find that invoice option. Or I can go to the new icon button and hit invoice. Now, the third one I was talking about is the gear icon for recurring transactions. And that's here, the gear icon. And then you would go to list and hit recurring transactions. And you say, well, Tutter, what is recurring transactions? Let's say that we accepted a maintenance contract with one of our customers, and we're going to provide $1,000 worth of maintenance every month. Well, instead of having to create an invoice from scratch every month, we can do it one time. And then when we need to use it, we can pull it up and send it off. That's what basically a recurring transaction is. Okay. And we'll talk a little bit about that later on in our presentation. Now, these are the types of transactions, and they're kind of grouped. All the things that you're going to need to do are grouped into these categories: banking and credit card, customer and sales. That's related to our accounts receivable system. Vendors and expenses. That's kind of tied into accounts payable. And of course, employees would be our payroll system. And I'm going to talk about each one of these individually. So under banking transactions, we can make bank deposits. We can transfer money between accounts and record that. And we can write checks. And so how would we get to the banking? We'll hit the new icon and other, go ahead and choose bank deposit or transfer. We're going to do a bank deposit coming up here, I think. I know you do one in the chapter. Okay. As far as customers and sales, these are it. You can create invoices to bill your customers. You can receive those payments. Like invoices is like, you invoice the customer and the guy tells you, I'll pay you later. Well, now he's paying you, so you received his payment. And then you have things like credit memos, like if there's a damaged goods and he returns it, your customer returns it, you'll issue him a credit memo. And of course, your sales receipts is actually a cash sale. I'm going to go over that right now. Anyway, under customers, here it is, invoices, receive payment, the credit memo, the sales receipt. It's all right here under customers. It's grouped under customers. Okay. Now, for some of these key choices, let me show you what's going on under the hood. In any computerized system, they've got to give you an option to record a cash sale or a credit sale. In other words, a sale on account. Now, in QuickBooks, they call cash sales sales receipt. So if you receive cash for a sale directly, then you're going to use this online form, sales receipts. And what's going to happen? You're behind the scene, there's a journal entry that's going to happen. You're going to be crediting your sales, and then you're going to debit this thing called undeposited cash. And you're saying, Tutter, what do you mean by that? Well, you receive the money, right? But it's not in the bank, is it? No. Until you put it in the bank, it's undeposited. So that's simply all it is. Now, I'll jump down to the bottom because you say, well, what happens to this? When we march it down to the bank and we make a bank deposit, and then we take it out of our undeposited cash and put it in cash and bank. So we'll record the bank deposit here. And that's when we take it out of undeposited cash and put it in the bank. Now, for our credit sale, in other words, you bill your customer and you say, that'll be $1,000, please. And he says, I'll pay you later. Okay, you're billing them. You're going to be crediting sales. and there'll be a debit to accounts receivable. And they'll become evident as we go through this. Okay. Now, you build them, your customer, because he's going to pay you later. Well, eventually he's going to pay you, and you're going to use this online form to receive payments from your customers on account. So then if he pays you, he doesn't owe you as much anymore, right? So you're going to decrease his accounts receivable and record the cash. And it's undeposited cash because you haven't marched it down to the bank yet. Okay, so that's kind of an overview. I know it's a lot of information. They don't cover this in this chapter, but I thought I'd introduce it to you now. So when we go dive deeper, you can think, oh yeah, Tetra kind of introduced us to that in chapter 3. Okay. Let's move on to vendors and expenses. Vendors and expenses, that's kind of related to the accounts payable system. Here, you can record the expenses and checks and bills. You can record the credit card transactions and all kinds of things, right? It's under here. These are here. I would like to tell you something, the difference between paying your bills and writing a check. And we don't do it here in chapter 3, but it's going to be evident later. And I just want to introduce it to you because it's kind of unique to QuickBooks. When you bill, you record a bill from your vendor, then you're going to record that you owe the money, and then of course that you whatever you bought for it, right? But now you owe it. Well, later you have to pay it. And what you're going to do, you're going to pay this bill with the pay bill form. And you're going to pay it with cash. You're probably not going to pay it with chickens, right? You can pay it with cash. So, and then you reduce your accounts payable. But I wanted to let you know that you wouldn't use the expense or check forms to pay accounts payable. We say, well, isn't a check for cash? Well, yeah, but the thing is, we've got to keep track of our accounts payable. And so if you record the accounts payable through the bill form, then you've got to pay for that bill using the pay bill form. You can't do the check form. It's got to be the pay bill form. We don't do it in this chapter, but it's coming. So when I talk to you about that in the vendor chapter, you go, oh yeah, Tetra did kind of mention that before. Okay. And then we've got employees and payroll transactions. That would include setting up your payroll. That would also include entering in each employee, marital status. Is he salary? Is he hourly employee? And those type of things, right? And also you can, when you get ready to pay him, you've got to enter his time and the like. You can use a single time activity form, or the one I like is enter weekly timesheet. So you can, it looks like an Excel spreadsheet, and you can just put in the hours for, say, a given week. It's pretty cool. But that's here. Set up the payroll, and then here's your single time activity and weekly timesheet. Like I say, I like this one. Now, there are other transactions that may not, you can't find a form for. Well, you can use your journal entry. So again, new, go to journal entry. So sometimes you say this transaction doesn't fit any of those on, those forms. So I'll do it through the journal entry. That's cool. I talked to you about recurring transactions. And if you want to get to recurring transactions, you use that gear icon, right? And what is that? I was telling you before, I'll be like a broken record because you'll hear it again. Maybe you'll remember it more easily. Let's say you accepted a maintenance contract. That means you're going to be performing services like $1,000 each month. So what you can do is you can set up a form that will bill your or invoice your customers, right, every month. And you enter it one time, and then you can just send it off. Now, you can make a recurring transaction as scheduled. So this is interesting because if you schedule it, like we're doing this maintenance contract every month, it will just send it out by itself every month. I would use this one if you know for sure that, you're going to do it. You don't want to mess, kind of make people angry by giving an invoice that, it wasn't true. You just kind of messed up. But if you know what's going to happen, schedule it. This one unscheduled is maybe a safer way to do it because you have it there and it's sitting there, but you have to manually go in and send it off. Okay. And then you can also have a reminder, just say that, well, hey, you got to do it. So I like each of these. I would use each of these, right? So that's kind of the way it works. One thing about the textbook is that it teaches you about accounting. And I think that's real important because, if you want to make $15 an hour, $16 an hour, and, just entering things, invoice amounts into fields in QuickBooks, that's fine. But if you want to make the six figures, you got to know what's going on under the hood, right? Because if something goes wrong, you got to know how to fix it. That's why these guys make in the six figures, because they know how it works. And if something goes wrong or they need to do something, they know what to do. And part of that skill is to know that this basic accounting. So here, you got to know that an asset is increased with a debit and an asset is decreased with a credit. So you can kind of review that. It's a good review. All right. Also available for you is the these videos that are grouped by chapter. And I kind of did this for you in each module, but you can go directly to your publisher's website and look it up and look at those videos. Now, personally, I haven't even looked at them. I'm so busy. I'm just trying to stay ahead of you guys because this is a new book for me. So I'm going and working through it, everything. So I haven't even had a chance to look at these. I might, if there's a issue I might have and I want a deeper understanding of something, I might try these videos. But anyway, I put them in there because they're available to you. Okay. All right. Well, that is it for my lecture 3. So I hope you enjoyed the presentation and just study hard, and I'll see you next time. Hey, okay, Jesse. Hey, do you have any questions?
No, I don't have.
Oh, I got to turn this my thing on.
Thank you.
Any questions?
Negative. I don't have any questions. Thank you, Mr. Truitt.
Hey, man, this is great to see you. I'm always by myself. So maybe I should ask the class if they wanted to do live sessions. I love live sessions. I do better when I have a live studio audience. So maybe I'll make a poll and see if people are interested in it, because I love to see you guys and work with you. So that's very cool. So I appreciate you being here. All right. Until next time, guys, we'll see you soon. Bye-bye.